Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you guys, and I'm a little bummed out. I was really hoping for a dollar bounce today. I mean, it's like we had the great setup, and when setups don't play out, I'm just like, oh man, that's no fun. It's like, dude, and I'm not going to write off the dollar for the day either, because we still have the North American session. So that doesn't mean that we can't get some movements. And one of the things that's kind of got me thinking here is, you look at these yen pairs, you look at the euro yen's actually holding that. I know we've bounced higher in risk, and I know the S&P is back above 4,200, but let's just take a step back for a second and just realize where the S&P has been for the last where are we at? Sorry, let me get over here. So where the S&P has been for the last couple of weeks, I mean, we've been above and below the 4,200 level like for the last week and a half. So what's to say that we can't just drop right back below 4,200 today? And so that's why I'm not losing hope that today is just shot. But there is a good chance because it is Friday, and but at the same time, like I said, I look at like the euro yen's still struggling here. The sterling yen's in its wedge. The Aussie yen's just holding around. Look, the Aussie yen looks just like the S&P actually. The Kiwi yen, remember we had a false breakout here from last week, and then the Canadian yen starting to weaken a little bit, but it's really just kind of in this ascending channel as well. But again, I don't want to disregard the fact that the euro yen, which is probably one of the bigger, it's one of the more actively traded FX yen pairs, but its reflection on risk is pretty significant too. So, like the guys that I traded with at Gelos, the euro yen is the pair that actually mattered to them the most when you're talking about yen pairs. So, watching the euro yen hold below like this 133.60 level right here, it's important. So let's see if the rest of the market takes notice. I'm not sure if it's going to or not, but let's talk about, let's go ahead and get some key levels out here for these pairs. So the euro holding channel support. And let's figure out, let me remove this one really quick. The 618 retracement did not come into play. This is a previous 618, so we don't need that at the moment. So we're back in the channel basically. Hold on one second. Back in the channel, I would assume, let's take it from the highs here. Oops. Okay. The high to low, our 50% retracement is going to come in at 121.85. And I know we're at trendline resistance pretty much right here, but we could maybe stretch it to a 121.85 today. I'm going to write that down. Support. $121. I mean, I would think any dip back down to this high right here and this previous low. So that's going to be a 121.30. That should offer us intraday support. Let's go over to the sterling. So here's the sterling. It bounced past the 618 right now. So these highs right here at 142 should come into play. I did sell some sterling just a little while ago, so I'm sitting in it and I'm not super comfortable, but I have to keep reminding myself that I did want to be short up here. So, but it is also non-farm payroll day. So I'm obviously cognizant of that. But we just did take out this trend line. So, the 78% retracement comes in at 142.18. That's also possible, but 142 basically right here should be, resistance today. Support, any dip back down towards 141. Obviously, 141 is pretty key support. So I think these numbers are pretty much the same from yesterday, right? So 141 is support. Let's go over to the Aussie. So the Aussie, nice squeeze, nice false breakdown, right? The Aussie dollar, well, this trend line resistance seems doable. That's 77.60. So let's write down that number. And obviously any dip now, anybody who's short is going to be like, okay, I just want it just to drop. If it drops back down to 76, remember the lower end of this was 76.80, 76.75. I mean, so, and now you got everybody that was caught short. They're looking at the same thing we were looking at this morning, right? It was a flag. So everybody that was, short thinking, okay, well, it stays below there, they got squeezed out. So that's what's causing this move higher. So now any dip back down to 76.90 is going to find buyers. Gorgum said, I think the job report is actually decent. There are still many people stay at home. I think US dollar will rebound. There are a lot of people that stay at home. Actually, I'm sorry. I think July 1st, if I'm not mistaken, is when unemployment claim and benefits expire. So what happens then? But the dollar will probably rebound, but I just don't know if it's going to rebound today. We'll see if it will today or not. Kiwi. So this is that's obvious support now. So we know where resistance is, and we know the range we're in. And so today, and I'm going to write this down for today because this is more intraday stuff. 171.50, and you notice I'm going to just keep everything in range. Any dip down to 71.50 should find buyers now. And this is, what? That comes in at 72. Those previous lows, 72.15. That should give us good resistance today for the Kiwi. Dollar Canadian, unfortunately, we're still stuck in the range. And even with the weaker Canadian jobs report, the dollar is just getting hit on the, on the dollar just getting hit in general. So I picked up some dollar Canadian at 120.98. I mean, I'm down like 20 pips, but I'm like, if the dollar is going to turn, it's going to turn here. But we are back below this previous breakout point, so we might just be in the middle of this range now. 120.50 should offer support, resistance 121.50, I'm sure. So resistance is 1. 21. Oops, no. 21.50. And, you know, I'm just going to keep it in range because we're clearly just in a range now, pretty much all across the board. So look at the Swissy. I think we got pretty close to the 200-day moving average overnight. Not that close. Well, I mean, you know, about 20 pips off. That's pretty close, actually. So Swissy today, I'll make this easy right here. Support will be at 89.65. Resistance 90.50. US dollar, Norwegian krona. $8.42 and support being $8.25. So it's the same stuff as we've been writing. Dollar Mex. Well, here we are back to the matter of fact, if we're going to bounce, we're going to bounce right here, I think. Because that's the 618 right here. So I actually might get long some dollar Mexican peso here. This should be support. I'll write down further support down here being this triangle, but I that all the way down to 1990. But also here at 20 should be support as well. Resistance. Well, now we've been writing 2030, but see this horizontal resistance, we have to write down 2022 now. And then 2032, because that would be the resistance right here. Right there. Or right there, sorry. 132, 2032. Okay. Dollar yen. So the failure up here at 10.25, that's the 78% retracement. Okay. And so support is going to be at 109.35. I think this is what we wrote down yesterday, if I'm not mistaken. So that's going to be valid. Still in a range. Guess what? Dollar index in a range too. And dollar index is slumped, but okay, dollar Mexican peso just push below. So glad I'm gonna wait on that. Obviously, I had my alarm set up for just below that, just so I could take a look at it. I still think that I still think it's possible we probe down here, but anyway. All right, going back to the dollar index. So the dollar index probably looks more like this. Would be my assumption. Let's see where support is for today. 90. That's the 618. So that should offer support. Any rally back now to 90.50 is going to find sellers. So I'll write that down. All right. Let's see here. Gold, silver, S&P. S&P, let's start there. Stelio, Steve, are you guys here?
Yes, sir.
Do I sound disgusted? I am
A little bit, yeah, but that's your usual anyway.
Whatever. No, I'm just these ranges are just like, come on, let's just break. I mean, I'm just look at the S&P. It's like, dude, we've been in this range for 2 weeks now.
Yep.
I mean, and it's like so annoying. I mean, I'll have to just write down. I'm going to write down 42.30 and then 41.70 and then just call it a day. I mean, it's just like.
Hey, Mitt.
Hey, Steve.
Sorry, I was on the phone. I heard you.
No, I was just saying, I was asking Stelios, do I sound disgusted or what? I look at these ranges and I'm just like, I feel, and I'm sorry, I don't mean to bleed that out onto you guys, but it's like the dollar had such a good setup for just a little bit of volatility, just get us a little bit of a squeeze, you know, like it would be a predictable one. Now that we're back in the range, it's like, okay, well, you know, I mean, you just have to just wait till we get to the, you know, the edge of the range, edge of the range again, you know, that type of thing. So,
yep.
You know, anyway.
Like it or not, it is what it is.
I know. I know. I didn't want to bleed out my disgust in today, but it's like, man, we had such a good setup. I mean, look at I was like, oh, silver can trade all the way back down to the 2660 level. Then we can pick it up, you know, to be long down there, because that would have been a perfect, you know, level to be on the long side.
Mm-hmm.
You know, this 38% retracing, get a nice little pullback, and then, you know, and now we're just like, we stopped short of that. And it's like, man.
Trust me, I totally feel you.
So resistance for silver should be probably up at 28. Support will be 27. And you notice how everything's going to be in range. So as just, well, I probably have to put gold is the only asset that has to be in bullish, because, you know, $18.52. I mean, remember, we've been saying as long as we're above 18.45, we got to stay bullish. So this is the only asset that I'm going to say 18.45, and it is still bullish while we're above that level. And the 1920 is resistance. That's the 618. Bitcoin, you know, we got hit because of Elon Musk's tweet, but also realized that this support is now, this is at risk. This is a false breakout of that triangle, and this is a risk. So a move below 35.5 would be bearish. It's, well, I mean, it's already bearish, but while we're below the 40,000 thousand level and 42,000 level. We have to remain bearish because that's the 200-day, right? And is that 41? But we can't even make it to 40. I'm just going to write down. I'm going to get rid of this. Okay. And if we break through this support, then, you know, you're probably going to see sellers really step in. All right, guys. So that's it. The bias chart is finished.
I've taken the snapshot. I actually need 2 or 3 minutes. So Steve, can you take over and I'll be right there with you, okay?
Of course.
Thanks.
So, all right. And yeah, you know, Steve, I just, you know, when you have, like, I was like, man, this is a great setup today. And when that doesn't come through, you're just like, oh, that's how I feel today. And it's,
Yeah, you know, I talked about it yesterday. I mean, yesterday's moves looked wonderful, if only for the upcoming data, because you always know that when there is some important event risk, you know, there is a good chance that you're going to see the catalyst for continuing a move that just started, but it might as well be the opposite, right? Completely retracing a move that started looking promising. And you know, within that context, you know, I always, whenever I see this type of moves, I always feel so happy that many years ago I changed my trading style to more of a medium term trading style instead of, you know, getting involved with all this noise. You know, saves me some peace of mind, I think.
yeah, but, you know, but I mean, look, that I get what you're saying. It's just, you know, when you have when you have a setup, it's just and this goes whether it's a longer term trade or anything. It's something when I'm like, you got a plan. And today I had a plan. I'm like, okay, you know, we get a dollar break. I'm gonna buy some dollars pretty aggressively. And then, you know, the data comes
Yeah,
out.
and it was a good plan. I mean, it's good to have this plan because we might have seen the data go differently, in which case I think, you know, it would work out very nicely.
Oh yeah, but when it doesn't happen, you're like, ah, that's
Yeah, damn it.
most,
Yeah.
that's the bummer. The bummer is
Yeah,
when
it is. It is indeed.
yeah, you have this plan of attack, and then it just doesn't, you know, it doesn't come
Okay,
Yeah, it
out.
doesn't
I am
manifest.
back, by the way.
Ah, damn, he's back.
Damn
All
it.
right. And anyway,
But by the way,
hey,
do I sound any better? Do I sound
Yes,
better
you
than
do.
usual? Yeah, I have my a good headset now, so
oh,
that's good. A
Ooh.
better headset, let's put it that way.
nice. Well, the market just opened, guys. So I'm gonna I've got a couple interviews I've got to do this morning. And I'm gonna bring in, actually today I'm talking to Jim Welsh. And so
That's
we'll
going to be
get
very
his
nice.
take on the markets. And I'm also talking to I think I have Stelios Contigula, some
Who the hell is
Today,
that
yeah,
guy?
don't we?
yeah, we have some sort. Maybe I'm gonna have to. Well, it was. I remember it's dependent on how you're feeling, but I do have to. I have to get ready for an interview with Jim. So, depending on how you're
Yeah.
doing today, you just have to let me know.
No
Anyway,
worries. Okay, no worries.
all right, guys. Hey, have a good one. Good luck,
You do, mate.
everybody. And you know, thanks for being part of ForexAnalytix. And Steve and Stelios will take care of you from here.
Thank you, Blake.
Bye-bye, mate.
So we got this number, which was a bit of a disappointment. As you correctly said, average hourly earnings was a lot better than expected, but still, it's not really the main event. The main event is the NFP, and it disappointed. And I think this is going to set the tone, as the NFP usually does. You know, if you go back in history, usually the way it trades on NFP day, then the following week it kind of continues. So I think
Usually yes, and
usually, yeah.
especially Stelio, if we take into account that, like it or not, the moves we're currently seeing are in alignment with the trend. So that's an extra reason why, you know, it's probably not a good idea to try to fade them.
Yeah, true. But you know, bottom line is, I think we are unfortunately gonna stay in this. Sorry, somebody's sending me messages. You can hear this, right? Let me go silent.
I'm not going to tell Semiramis, swear to God.
It's my private banker, actually. So I think the trend, unfortunately, will continue. we're probably going to see a grind higher. We're actually not the grind. Nasdaq is up 1%, but we're still in this kind of slow melt up higher, and I don't think there's something we can do. And the dollar is going to be on the back foot. Commodities, metal is probably going to be well bid, and we continue like that until we get something from the Fed. Will we get something from the Fed? Well, as long as they're getting numbers like this, which are not screaming, "Oh my God, rate hike," then I don't think something's going to change. Unfortunately, again, we want two-way price action, but at the moment, we're not getting it.
Yeah, I'm afraid that they're doing their best not for us to get two-way price action, and the result is going to be the obvious one. They will keep succeeding for a period of time that's already long, but once they stop succeeding, it's going to be a trading environment that will be remembered for decades, if you ask me.
Yes. Did you hear, by the way, did you hear about the guy who sold an invisible statue? Did you hear that?
Why not?
There's a guy who is an artist apparently, and he said, he said, on this square here, there's a statue. It's real, but you can't see it, and you can buy it. And
Sure
really,
thing.
you have to be careful because its energy has not to be disturbed, stuff like that. And I'm like, people either don't know what to do with their money, or they're trying to put it anywhere they can to get any kind of return on anything.
I agree with you, but in this case, I doubt anybody's going to get a return on that.
Man, you never know. There might be a guy or girl or whatever who wants to buy it at a higher price than you. And so many assets or instruments.
And how
like
much
that.
was the invisible statue?
How much?
Sell for?
$15,000.
Okay.
So
I'm declaring myself an artist starting today.
Mate, I'm with you.
Yeah. And I even have genealogical proof that I have artistic tendencies. I have two architect parents. So what the hell? Why not? My father has even actually won in the 80s a sculpture, third prize in a sculpture competition, Greek-wide. So sure, there it goes. I'm an artist. I've created a few of them. I'll tell you where they are, but be careful not to disturb their energies, okay?
Yeah.
And I'll send you my bank account as well.
I think this all started with the banana guy, right? The banana with a duct tape on the.
Yeah.
Anyway, okay, let's talk markets. What are we seeing today? Cryptos have been. Did we talk about cryptos on Face? I don't think we did.
I lost the first 5-7 minutes, but I don't think
we didn't.
No.
And it's all on the back of Elon Musk posting a couple of meme images on Twitter about Bitcoin. And I mean, when you depend on people like that for the performance of your asset, you should be scared. But anyway,
isn't that the definition of store of value? Something that moves based on tweeting.
But having said that, I have a friend. I've told you about this. A university friend of mine who has made tons of money compared to what he's been risking, and he's in and out, always long. And you can do it. You can make money. But
absolutely,
if you're trading on the back of a thesis, then I have some questions for you. But anyway,
that's what I said the other day, using a little bit of a different language. Some people, misinterpreted that. But in any case, I totally agree with you. I think that cryptos are a great vehicle to scalp and trade short term, because they have amazing volatility. Although, as my friend Dimitris was telling me the other day, he said, at some point I believed that the crypto market is going to be influenced by the rest of the market and toned down. I never could imagine that the rest of the market would be influenced by cryptos and become a joke, in the sense, you see what's happening with equities like AMC, so on and so forth. I mean, we have so many assets nowadays that have started trading like, minuscule price cryptocurrencies. So I mean, this is the general environment we're into, right? People get more and more greedy. They try to grab more and more returns. Retail crowd is entering the market and has the hopes that they can become rich extremely fast. But in any case, cryptos are a great vehicle to trade. There is No question about it.
Yeah.
And there are people like your friend that have made good money on them.
Yeah. Obviously, of course, and they will continue. But anyway, it is what it is.
Having said that, the rejections in Bitcoin and Ethereum, since we went into cryptos, I think they were textbook. Look at the triangle here in Bitcoin. Look at the triangle here in Ethereum. So I think this keeps the technical interpretation open that there is one more leg lower that might be possibly coming through sooner rather than later. So I would be very, very careful being long at least these two cryptos in at the time being. I think after the next leg lower, there might be a very good technical opportunity to buy them. I think it's very, very dangerous to try to do it now. That's what I believe.
Yeah. I think you're right. Okay. Otherwise, I didn't have much to say. Metals are doing well, obviously, on the back of the lower dollar and rates not going higher. I think really rates is what I'm looking at. I said that yesterday. I'll say it again today. This is what I think the catalyst is going to be. Obviously, unless we get some kind of crazy event like COVID or a geopolitical event. Obviously, you can't predict these. But
look at the 10-year. I mean, we had data today. So, I mean, yes, is it down on the day? Yes, it's down on the day. But look at the chart. Yeah, I mean,
nothing.
Look at the chart. I still see a consolidation here in yields, which, from my experience, the chances of this being resolved to the upside are much, much higher than being resolved to the downside. So I would still look upwards. Now, we can obviously spend more time chopping around, roughly in this area. But I do think that eventually the next leg is going to be to the upside in yields, with whatever that means.
Yeah. Well, let's see. But it's definitely consolidating sideways, and we'll see how it goes. But really, as I said before, I think this is going to be the catalyst. The higher yields, properly higher yields, is going to be what will bring equities lower. Because let's face it, they've been going this way higher and higher, almost purely on the back of zero rates and risk being free. Mispricing of risk in the last 10, 15 years has been ridiculous in my opinion. But,
completely.
When junk bonds are yielding, 3 and 4%, that's just nuts. But anyway,
don't go far away. Greek government bonds yield what, 1.5%?
Oh, they're below 1% now.
Yeah, with reported inflation being 2%. So negative real yields in holding, for example, Greek government bonds. I mean, come on.
Yeah.
In all honesty, there is not even a sniff of price discovery anywhere in these markets, right?
Yeah, true. Okay, let's have a look at whatever you want to see, and maybe we'll take some questions as well.
Yeah.
Leon says they paid for the statue in invisible money. Did they pay with cryptos? I don't know. Or because cryptos are not invisible, right? You can exchange them for fiat.
I would actually tell them, I wired you the money. They're just invisible. So don't bother checking the balance of your account, because that money doesn't really show up there. But the next time you want to buy something invisible, it's gonna count.
Yeah.
To be honest, I wish I had the phone number of the guy. I would really love to have a conversation with him and record.
Oh, well done to him.
It would be comedy gold.
Anyway, okay. All right, let's have a look at whatever you want to have a look at.
Yeah. So as Blake already said, we depending on the asset, but we're seeing either like a big recovery in comparison to what happened yesterday, or a complete one, right? So, for example, like take the Aussie. We were talking about this potential small head and shoulders formation, because if you remember, I made it very clear that I don't think that the Aussie is in a big topping formation. I do believe that medium to long term, we're going to see higher prices in the Aussie, in the Kiwi, and the rest of the commodity currencies. But in any case, the triggering of that small one would lead to somewhat of a move lower. But if we actually continue like this on the day, we've already retraced like 4/5, even more, perhaps like 80% of yesterday's move, 90% of yesterday's move. So, if today's candlestick, which is going to be daily and the end of the weekly as well, looks like this, I would be very, very careful being to the downside, right? Kiwi, an equivalent situation here, meaning we did seem to have a breakdown, and now we are attempting to climb back within this channel. So let's see how we close on the day, because you never know. I mean, I've seen frequently like event risk produce a move and the market then changing its mind a little bit later and completely retracing the initial reaction. Now, I'm not saying this is going to happen here, but I'm saying that there is always a possibility, and today's close is going to be important because like it's also the end of the week, as I said. Now,
Sorry.
no problem, Stelio.
Sorry, I thought I was muted. I'm sorry,
Don't
everybody.
worry. Euro, pound, and everything else. I told you since the beginning, I believe that this move lower in the euro, for example, would be contained. I was looking for an extension maximum towards the beginning of this wedge at 119.75. Is there a chance that we're not going to even see that? Yeah, of course there's a chance that we're not going to even see that, right? That's why you always need to respect the trend. Now, USD CAD, if you remember, I mentioned yesterday that yes, we seem to be rebounding, but don't forget that we haven't even broken out yet from this triangle. Nice rejection so far today. So still remaining within this consolidation. And what I've told you before about consolidations. Consolidations most frequently get resolved in the direction of the previous trend. So, keeping that in mind, would I be jumping the gun being long? No. That is the exact same reason why I did not jump the gun in closing my USD NOK position, because I know that this 840 area is an important area of resistance. And as long as we trade below it, there is absolutely no technical damage done to the downtrend. Yes, I know we're overextended. I know we haven't rebounded for a long period of time, but frequently trends just, need a lot of time before they can produce a decent rebound. That's why it's better when you find yourself in the correct direction of a trend to not try to be fast in taking profits and just keep trailing your limit order and hope for the best. Sometimes you get surprised by how far a trend can take you, right? As in the case of the USD NOK. Yeah, I would have expected that we would have seen a bigger rebound earlier, but we didn't. Okay, so I'll take it. No, no objections there from me. Now, we've seen this move lower in yields. The 10-year yield has already retraced yesterday's move higher, which wasn't any big move to write home about. So it's not a surprise that USD yen has done the exact same thing, meaning has completely retraced yesterday's white candle. Actually, we have just engulfed it, not engulfed it actually, because the high of the day is not higher than yesterday. You can get real engulfing candlesticks only on a Sunday night in FX under normal circumstances. But in any case, we've completely retraced yesterday's gains. Now, is this like a bearish signal? Not yet, right? Not yet, because we're still trading above this red channel. But in any case, if we close like this, we know that any kind of a hint the market gave us yesterday that it might be in the mood of finally producing some two-way volatility, some two-way price action, some kind of a counter trend move to the moves that we've been seeing for so long, might be off the table for the time being. So keep that in mind. And that is why, I was very skeptical in attempting to trade yesterday's candlesticks, knowing that there is an important event risk coming today, and it's also the last day of the week. Now, Same thing spilled over to the metal markets as well. In any case, I said that, in the case of gold, I would be very skeptical in turning bearish as long as we trade above 1850. We didn't even make it down there. This might prove to have been enough, right? Silver, still looking different from gold in the sense that gold has broken out from its long-term consolidation, corrective formation in this case that was a descending channel. But in the case of silver, I see like a big symmetrical triangle here, which we haven't broken out from. So there is some divergence between what gold has done, which you can easily say that it's a legitimate technical breakout, and silver that hasn't followed in its footsteps yet, right? Now, palladium and platinum, my opinion. I've told you that palladium might have already found a low. If not, we might see another low, but I do believe that this move lower is corrective. I mean, all of its characteristics are corrective in nature, so it remains to be seen if we need one more low or we're breaking out imminently. In the case of copper, same deal. 436 is important support. It was resistance. It was the previous high. It is the 50 DMA there as well. So we might be near finding a low in the case of copper as well, right? So nothing has changed in this market either. And here is platinum. I think platinum looks by far the worst of the rest of the metals in the sense that technically speaking, it looks like it wants to have another leg lower towards 1040. So comparatively speaking, it would be the last metal I would be willing to buy in the short term, right? Because the others look better. That doesn't change my medium to long-term bias. I believe that platinum has a lot more upside left, and it's a good buy if you want to buy and hold for a long period of time. If you want to be shorter term, I think you should give it the chance to perhaps give you a better entry level. And as I've said, 1040 is probably a good candidate for a level to produce some kind of a low. Now, crude oil doesn't care at all about any of that. It just remains relentlessly bid. We're currently testing today the 88.6% fib at $69.50. I've been bullish and I've remained bullish crude since when more or less we found the lows, and I really see no reason why this is going to change. I do believe that we're getting closer and closer to the time that we're going to see a deeper correction lower finally, but I think that might even come from levels closer to $75, right? I did say that if we break higher from here, it's a good buying opportunity, and obviously the higher we distance ourselves from the triangle trend line of resistance, the worse the risk reward becomes, because we've said many times that triangles are often terminal formations. So perhaps this leg higher that we're currently seeing unfold might be the last one before a deeper corrective move. So we might find ourselves at the 161.8% fib, then get some kind of a deeper correction and then continue higher. So something like that, right? But for the time being, I really see absolutely no reason why somebody would want to be bearish crude oil. As simple as that. I think it's the wrong side of the market to be as simple as that. Good morning, Stephen and Stell. They paid for the yeah, Leon, that was an amazing comment actually. I hope they did. I really hope they did. US factory orders, by the way, that just came out at minus 0.6% versus minus 0.2% that was expected. So worse data, but we did have quite a large positive revision for last month, where the positive 0.3% was revised upwards to 1.4%. So almost fivefold upward revision to last month's data, which is more than enough to offset the worse than expected data of this month. In any case, do I believe that the US factory orders would move the market following the NFPs? No, I don't. I'm just, doing the commentary, but I don't think that in any case, unless the number was an unbelievable outlier, I don't believe it would influence, the rest of the trading day one way or the other. Okay, so let me think. Was there something else I had in mind? I think that's more or less it. So we can go ahead and go through some of your questions. 10-year yield, by the way, 3% down on the day. So perhaps the yields will keep on pushing lower. That should spill over mostly in USD yen to begin with in the FX world, and then to the rest. Having to do with indices, that's the last thing. Keep in mind that the S&P is holding for the time being this wedge. The Nasdaq is trying to hold this channel. So this interpretation is still open, that we might have another leg lower before higher. But we're getting closer and closer to the all-time highs. So risk reward is still appealing, but you need to be fully cognizant that if you want to be in the other side of the market, you are counter trend, right? It's more than obvious. Okay, so let's go through some of the questions. SM8. Nothing has changed here. You see where we are. Haven't broken out yet. Most likely we're going to end up breaking the upside, but hasn't happened so far. So patience. Frequently, if you want to participate in a specific market, you need to be very, very patient. That's the good thing with monitoring a lot of markets. You don't necessarily need to be patient because there is always something that looks appealing for you to trade. But if you, specifically want to, participate in a single instrument, be it a stock, a bond, or whatever, sometimes the best thing you can do is just wait. Same thing applies to this that you're asking for, the IYT. What do we have here? We have, in a very, very bullish trend, a triangle. So my assumption is that we're going to break higher. I would be careful because after this break from the triangle, I would be looking for a deeper correction lower, right? But you can definitely buy the breakout, but we're not there yet. So keep that in mind. XRT. Nothing has changed here either. You can see here the chart. We're still coiling, still haven't broken out. I think higher chance to break to the upside, but hasn't happened yet. Now, there is a question about the GDX and the GDXJ. So here's the GDX.
I'm still long those, by the way.
I find nothing wrong with that, Stelio.
And the good thing is that I'm up to like 10%, so I have so much leeway. And
that is very good. And in my opinion, there is still a good likelihood that we are forming another bull flag here, right? So yesterday's gap lower didn't invalidate this formation, as you see. So for the time being, all looks good and well in GDX. Nothing technically bearish for the time being. Same applies to the GDXJ. It has broken out several days ago. Yes, it has somewhat pulled back. It's currently, yesterday actually at the lows, it back tested the 200 daily moving average, currently holding above it. Nothing that invalidates the bullish outlook in the GDXJ either. So, I wouldn't try to take the other side of this market, I can tell you that much. Steve, you stated earlier that you used to trade shorter term and now you're more of a longer term trader. That is true. What prompted you to make that change, and what did you do to ignore the noise when you see markets gyrating back and forth and not trending? Yeah, I've talked about it before a few times, and I'll tell you, it was very simple. What prompted me to do so was the fact that I wanted to sleep better at night because I was waking up like 2, 3 times per night, grabbing my phone, checking my positions, and then going back to going back to half sleeping in essence, because that's not a proper way to sleep. Then the other fact was that, as everybody, I frequently got fooled into acting upon the so-called noise and either abandoning good positions that had more to run, or entering positions I shouldn't have entered, right? So I realized that once you move in higher time frames, the noise gets reduced substantially. And, this is a factor that you, uh, of course, you don't completely extinguish, but you minimize it for sure, right? So that was another reason. And once I tried it, I saw it works better for me. So afterwards, the reward of doing it and working was more than enough to, for me to never look back. Now, what did I do to actually achieve it? It's very simple. I removed the trading platforms from my computer. Actually, I didn't uninstall them. I never opened them again. And I started only trading from my mobile phone. Why? Because I didn't want to have a platform open all the time and seeing my P&L. And I stopped looking at my P&L on an intraday basis. There are days that there are times that days might pass and not even look at my P&L. That helps, a lot. It does wonders. Any more questions, guys, girls, before we call it a weekend? SILJ, yeah, the Silver Juniors. SILJ.
I'm long those too.
Okay, let's check SIL first, since we are at it, and then we can also check SILJ. Last time I see we checked it here on the webinar, we were down there. I said we might move a little bit lower towards this trend line support and then higher. We did the higher part, but we didn't first need to move lower to retest the trend line support. Now, there is a little bit of an uncertainty of if we've already broken out of this or not. The reason I'm saying this is because I think this is the channel. We had this like firework day up there, which I don't want to so much take into account in the drawing, but objectively, somebody can make an argument that's fine and well that this is the trend line resistance, right? And it might as well be. So if you want to be more conservative, you can take this as the channel in this case, in which case we haven't really broken out yet. And in which case you can say that, okay, from a risk reward perspective, it might be worth being short here against the highs, right? I wouldn't do it, I'm just saying. But once we break through this trend line resistance, there is no argument to be made that we haven't registered the bullish breakout. So there you go. Now having to do with SILJ, it's exactly the same conundrum here, right? It looks like a very nice symmetrical triangle if you ignore that same day, obviously, as you understand, that we had that firecracker type of price action. But somebody might want to say, something. I think, you should take this as a trend line resistance. Okay, fine. You might as well do it. But, in any case, we're going higher. I mean, I've been clear about this for a long period of time. I so much believe we're going higher, much higher. So yeah. Do you think it is safe to hold long position on gold for the weekend? I can't answer that question, mate, because I'll tell you why. Because we might not have the same definition of safe, right? I don't know what kind of leverage you're using, so on and so forth. If you're asking me, because this is the only question I could answer, if I would hold my gold over the weekend, the answer is yes, right? But I can only answer for myself, taking into account my own risk parameters, right? You're the only one that can answer that question for you. Now, especially you, my friend, if your alternative is holding Turkish liras, if you're asking me if I would rather have Turkish liras or gold, I don't need to answer that. You already know the answer. So yeah, I mean, in that case, I would consider it even less. SEDG. Okay, let's close with this SEDG. Let's see what this is. Oh, we've seen it before actually. There you go. Solar Edge Technologies has worked perfectly so far, right? Another rejection more or less from the channel. In my opinion, it's a matter of time for this to break to the upside and continue to the upside. But why would you jump the gun and buying it as we speak? Because there is nobody that tells you that we can't see another leg lower towards the channel's trendline support. So, I think it's premature buying it here, although you would probably find yourself in the right side of the market sooner rather than later. The two areas I would be more willing to buy it is either if we move lower towards the trend line support, in which case you have a wonderful risk reward ratio, or alternatively on a breakout from this trend line resistance, in which case you have the perfect breakout type of trade. And you can place your stop loss before the previous low. So, for example, if we make like the assumption that we will immediately move higher from here and we break out from there, you can buy it there and then place your stop loss there. And then you have a very nice textbook breakout type of trade, right? So these are the two alternatives that make sense to me at least. Okay, guys and girls, I wish you all a wonderful weekend and I'll see you back on Monday.
Thank you, Steve. Thank you, everybody.
Bye-bye, Stel.
Have a good one.